Many people are asking of late, after 6 months of U.S. trade policy disruption, when will investment flows return again to Latin America? Well, at AMI, we have always been a pretty good barometer of investment sentiment across Latin America because we work across the region and in so many important industry verticals, from logistics and manufacturing, which are directly impacted, to extractives that are far less impacted, to digital and service sectors, which are also rather removed from physical good trade policies. And what we're seeing is that now that we've entered the second half of the year and the early weeks of July, some companies, having reviewed their financial performance in the first half and realizing that their business remains in good stead, they're moving forward with some of their CapEx projects. They're moving forward with particularly market-seeking, market expansion projects, whether it's market entry, product launches, etc., because their future growth depends upon these investments being made now. We've already seen projects being approved at a far greater pace in the first 2 weeks of July than any time in the last 6 months. There are companies that will hold off to see if there is some kind of resolution between the U.S. and its major trading partners, be it Canada, Mexico, China, Europe. That I think is a tricky thing to do. Certainly for some companies, how those policy decisions end up will have a material impact. But I think that what we'll find is that trade disruption is far less than first envisioned, in part because of the tariff levels we're talking about, and also because of the negotiating style that seems to be the new normal in Washington, where a certain degree of hyperbole is threatened to move complacent partners into action. So this process could take a lot longer than people realize. Most trade agreements take a year or two to negotiate. The idea of pulling those off in a few days is probably naive. And so companies are just sort of waiting and seeing. I think you're seeing in the extractive sectors companies moving forward, particularly in mining, whether it's critical or precious, where high prices and the pursuit of these resources is of utmost importance today. And so we're seeing quite a bit of movement there. We're also seeing in the digital and services space that currencies are holding up in Latin America vis-a-vis the dollar. In fact, some have strengthened. And so the demand in these countries for services, digital and otherwise, remains strong. We're also seeing a positive changes politically in Latin America as governments embrace more pro-investment policies after flirting with sort of leftist populist policies over the last few years that bore almost no fruit. And so as a marketplace, most Latin American countries are not threatening countervailing duties on the Americans or anyone else. In fact, free trade is moving further forward. The Mercosur and the EU have never been closer to a free trade agreement. Other Latin American countries are pursuing free trade agreement with other global South partners. And so we're seeing actually consumption holding up in Latin America, and that drives a lot of companies' investment decisions in terms of market expansion in the region. Where we will likely see continued pause is around Mexico and the nearshoring promise that it bears. Certainly, the economics of moving a factory from China to Mexico remain strong. But until we have the new rules of the latest version of NAFTA established, that nearshoring flow is unlikely to reach its true potential. And so it's a mixed bag. But certainly companies are moving forward now in July, and we'll see more as the publicly traded companies report their second quarter earnings and see how their stock prices react. I'm pretty sure we'll see more of those companies moving forward with their CapEx plans and their other investment plans in the region and elsewhere in the world. And then it will be certain manufacturers who depend upon the linkage to Mexico in particular who will be holding off further.